markets have sold off heavily over the past 2 weeks and volatility have spiked up due to Trump's introduction of what we call reciprocal tariffs. So there's still a lot of fear in the markets, but gems are slowly starting to appear. All right. So what are two Chinese blue chip stocks that have sold off, recently, but there are looking to be some bargains coming soon, and could we actually position ourselves in them soon when the time comes for a reversal? And how you can actually buy these two Chinese blue chip stocks, just like any other stocks on this Singapore exchange. You want to find out how, and you want to know what these two stocks are, and more importantly, when and how to position yourself in them. Make sure you watch this video all the way to the end. Let's go. So the first Chinese stock I'll share with you, and that would be Bank of China, listed in Hong Kong. This is the underlying listed in Hong Kong. The code is 3988. But as I mentioned later, I'm going to share with you guys how you can actually buy Bank of China in the SGX under what we call Singapore Depository Receipts, SDR, right? So I'll come to that in a bit, but let's take a look at this stock right now. Bank of China listed in Hong Kong. You can see that we are trading at about $4.43 Hong Kong dollars. So over the past 1 over year, you can see that the longer term uptrend is intact. Look at the red and the blue line both pointing up. Even up to now, the longer term trend still remains up, right? But the short term, we did see a couple of weakness over the past 1 over year. How do we tell the short term weakness? Well, you could take a look at this green 20 days moving average line. So it's pointing up, not too bad, not too bad. It starts moving up. The short term trend is up. Look at this, right? It starts moving up, it starts moving up. But every time the short term trend turns down, like look at this right over here, the green line starts to turn down. Well, not so good. Prices started to come down as well, right? So has the short term trend actually turned down over the past 1-2 weeks? Let's find out. So you can see, right, the green line since December, it was moving up, and over the past 2 weeks when we saw the market selling down, well, it got hit as well. World markets got hit, Singapore market got hit, the Chinese market got hit, the Chinese blue chip stocks also get hit. So the 20 days moving average have started to slow down over the past 1 to 2 weeks. So I would say that the short-term trend is down right now, even though the longer-term trend remains up still. So is it time to kind of like get in right now? Where should we think about getting in first of all, right? Well, I would say that we have found, I would say, some support, maybe somewhere around the $4 Hong Kong dollars level to around the $3.80 Hong Kong dollars as well. So this is the key support level. So by some bargain hunting has happened. We were right over here as well. You can see it was a resistance from September all the way to December. When we broke above it, it became a new support level. So these two levels look really attractive. Anything from $3.80 to $4 or maybe up to $4.20 Hong Kong dollars, it looks really attractive for any opportunity to get back in to ride the reversal when it comes. And if you take a look at these support levels, right, that is also where the red line, the 100 days moving average is, and also where the blue line is, where the longer term trend, all right, line is, where if we hold above, it still remains pretty good, all right, whereby the uptrend is still intact, right? And these two longer term moving averages can also act like a little bit of a dynamic longer term support level, right? So the question is that, should we think about getting in right now? Should we just buy at $4.42? What would be a good confirmation of a reversal move, whereby we can really see a good confirmation that it's starting to move up, and that's where you could start loading up. So let me just go ahead to show you guys that based on this one good trend strategy that I've been using for more than a decade now, right? I have this indicator right over here called the One Good Trend Pro indicator. So let me just go ahead to turn it on. Right over here, you can turn it on for any stocks, Singapore stocks, US stocks, even the Chinese stocks on Hong Kong as well, right over here. So look at this right over here. Let me just turn it on. Pump. So I just turned on what we call the buy and sell signals on the chart for Bank of China. And let's see what it says. So you can see, right, for Bank of China, not too bad, right? We had a couple of a bullish signal in February last year. There we go, right? All the way up. The short-term trend, the green line turned up, right? And I mentioned we went up and all the way up, and we push up, I would say, from here all the way to here, about 31% in about 4 or 5 months. Not too bad, all right? A couple of bearish signals that's coming down a little bit. A bullish signals went up. Another bullish signal in December and went all the way up, right, from until like April, and then that was where the tariffs was announced. Everything sold off. So you can see right now we actually have a bearish signal coming out. So not too good, right? The short-term trend, as I say, is still down for now, unfortunately. And of course, the green line, as I mentioned as well, is still down for now, right? But what could be a confirmation to get back in? Well, I would say that one of the things we can look up for would be to see a new bullish signal on my 1GD Pro indicator, something like this, right? Something like this, or maybe something like this as well. If we do see like a new bullish signal, that would be a pretty good confirmation whereby as buyers are starting to come back up. We have broken some resistance level. We can potentially push even higher, right? So that could be like the first confirmation, right? And the next confirmation would be when we see the green 20 days moving average line. So let's assume that the bullish signal comes out over here, or here, or here, or maybe lower, maybe somewhere over here. And if we were to see like the green 20 days moving average line that is still pointing down, maybe starting to flatten out, all right, maybe starting to just point up like that, all right, that could be where we could start to see another confirmation, something like this, right? It was down, pam, right, and we started to push up. That's where you can see a confirmation whereby, the reversal is really ongoing. We're in the midst of it, but right now, still not entirely out of the woods yet. But I would say that it looks really, really attractive, right? Anything from 4 Hong Kong dollars all the way to 380 Hong Kong dollars, I think it looks really attractive. So I'm not too sure exactly when the bullish signal comes out or when the green 20 days moving average line will start to turn up. But when that happens and be near these support levels, I can tell you that is where it will be another confirmation to really start to load up, to ride the reversal, maybe all the way back to like the $4.80 Hong Kong dollars. That would be a bit of a resistance. That was where we headed to somewhere in March before the tariff was announced, and of course we have sold off from there as well, right? So that could be kind of like a bit of a resistance level. Anything right over here from $4 to 380, maybe to 420, I think that could be really good, attractive level. So let's take a look at how, of course, you can actually buy this stock on the Hong Kong exchange, right? But what happens is that you can actually do it right now very simply, just by buying this SDR, the Bank of China SDR, Singapore Depository Receipts, on the SGX, on the normal Singapore Stock Exchange. Like you buy your DBS and UOB, like your normal Singapore stocks, you can actually do it right now. You can buy this SDR that tracks the Bank of China stock, all right, and take a position in this, right? So how to do it? Well, what I've done is that based on these key levels, like for example $4, right? $4 is 4 Hong Kong dollars. So if you just convert it to Singapore dollars, it will be 4 times exchange rate of 0.17, and that would be like 68 cents Singapore dollars. Right, same thing, I've done the conversion, 380 Hong Kong dollars, convert to Sing dollars, you get 65 cents, and also this resistance at $4.80 Hong Kong dollars, you convert it, will be 82 cents. So now let's go ahead to dive into how you can actually buy the SDR. What is the name that you can type in your trading platform to search for this SDR, right, before taking a position in it. So this is the SDR right over here. You can see that we have the Bank of China, all right, and the code is 398, pretty much the stock that I've shown you guys just now. Bank of China listed on the Hong Kong Stock Exchange, and the price is about $4.43 Hong Kong dollars. But if you just look down right over here, you can see, right, this is the SDR right over here, right? Bank of China, CN space, HK space, SDR, and you can see it is a 1-to-1, all right, 1-to-1 kind of a ratio. What do I mean by 1-to-1? That means one SDR is equivalent to one underlying stock. So very simple. In order to get the Singapore price, you just need to times Hong Kong dollars price, like times 0.17, and that's how you pretty much get what we call the price of the SDR. Like for example, $4 times 0.17, the exchange rate, you get 68 cents, right? And if you look at it right now, the Bank of China SDR would be at a price of 75 cents. So I mentioned, right, 68 cents, maybe 65 cents could be where some support could come back. So if it does dip to this level, still 68, near 65, and of course you get a bullish signal, you see the short-term trend turning up as well, that could be very attractive, confirmation, attractive prices as well to think about getting in. So now the price is about 75 cents. Why? Because it's gone up a little bit, right? You can see right now we are right over here, somewhere in the middle. It's rebounded a little bit, so we are slightly higher, so about 75 cents Sing dollars if you convert it from Hong Kong dollars to Sing dollars, right? So that's how you could actually buy this SDR. The code is HKEX, BND right over here. You can just go to any trading platform, type on it and place an order, and that's how you pretty much take a position on this top Chinese stock, just like any other normal Singapore stock, and you do it using what we call Singapore Depository Receipts. 1:1. This is the ratio for Bank of China SDR. Let's move on to the second Chinese stock that you can actually think about positioning yourselves because of the current market weakness soon. All right, when we get some signs of a confirmation of the reversal. All right, and of course, as I say, this stock you can also buy it on the Singapore exchange using what we call the SDR. So this stock is none other than Xiaomi, right? Xiaomi. So this is the Xiaomi, right? Listed on the Hong Kong Stock Exchange. The code is 1810.HK, right? And it is trading at about 42 Hong Kong dollars right over here, about 42 Hong Kong dollars. So you can see, right, for Xiaomi, it's been one of the top performing stocks since last year because we got actually a 1GT bullish signal coming out somewhere in like August, right? 22 August. Let's see how far it has run, right? From 22 August, we got a bullish signal. It starts going up. The short-term trend turns up. The longer-term trend has been up. Even now, the longer-term trend based on the red and the blue line, it is still up, but short-term is down for now. But let's take a look at what has happened for Xiaomi when we first got the bullish signal in August, all the way up until finally we got a bearish signal coming out just about 2 weeks back when the market sold off, right? That would be about 188% in about 6 to 7 months. Not too bad, not too bad. So I think we got a bearish signal. I think it's good to get out, take some profit, right? If you have rode the upside. But the key here is that when should you think about getting in again, because it looks really attractive. It seems like we have found a little bit of a support. Let's see where could be levels you could think about getting in, right, when the time comes, right? So we got a bearish signal right here, and if I can show you very quickly why did we have a bearish signal. So as I say, right, we have this 1GT Pro indicator, right, in a matter of seconds for any asset classes, any stocks. You can just turn on the buy and sell signal. If you see a green bullish signal, then probably to think about getting in. If you see a red bearish signal, let me just turn it on like this, probably to get out, take some profit, get out, all right, and then maybe get back in again when you see a new bullish signal. Does it make sense? All right, so we can turn on what we call the trailing support as well right over here. Let's turn it on. There we go. So you can see, right, when we had the first bullish signal for Xiaomi coming up, this green line, what we call a trailing support, actually pops up. You can see, right, it follows Xiaomi as it moves higher for the past 6 to 7 months. Follow it, follow, up. And finally, right, so this trailing support is very powerful feature of the 1GT Pro indicator. Essentially, it gives it space, right? It gives Xiaomi and any stocks, any asset classes, the space, the volatility space, right, to move higher, right, if it looks good, if it's pushing higher, if it's strong, it gives it the space to breathe and move even higher, right? But one fine day, if we were to go below it, like you can see right over here, we went below this trailing support line, not too good. That's where we can trigger a 1GT bearish signal, right? So we got a 1GT bearish signal based on that reason, because we went below the trailing support, all right, whereby it accounts for volatility, and if you are good, you're supposed to stay above it, right? If you go below it, not so good. So you can see after getting this bearish signal, we actually sold down even more. So let me just go to turn off the trailing support so it's not so messy. So we got a bearish signal, right, due to a break of the trailing support, and obviously you can see that the green 20 days moving average line that was going up all the way, since like August was up and up, right? Very good long-term uptrend. The short-term trend was up as well. But right now, over the past 2 weeks on the market sell-off, the green 20 days moving average line has started to point down. Is it still pointing down now? Yes, it's still pointing down, right? Will it start to maybe point back up soon? I have no idea, but that's what we're looking for in terms of a reversal move. If it starts to point back up, and of course, we see a new bullish signal coming out, like from here, right? And we see it coming out right over, maybe over here or here or here. I don't know, right? That could be a good confirmation of that reversal move, and that's where you could think about getting in again, right? So let's take a look at some of the support levels where hopefully this bullish signal can come out, and even this 20 days moving average line can even start to point up, right? Well, I would say that a level has came out. This support level will be somewhere around that 36 Hong Kong dollars. So 36 Hong Kong dollars, you can see right over here. I've drawn this green line. So if you convert it to Singapore dollars, well, very simple. 36 times the exchange rate right over here of 0.17, right? But for Xiaomi, essentially what we have is this, there's a ratio of the SDR to underlying, whereby 2 SDR is to 1 underlying. So in order to get the SDR price, you need to actually divide it by 2. So 36 Hong Kong dollars, you times 0.17 and you divide it by 2. That is pretty much how you get this $3.06 Singapore dollars. Pretty much the price of this support level if you were to head to that level. So let's go ahead and share with you as to how you can actually buy Xiaomi on this SDR, all right, on the Singapore exchange very easily. Let's go. Okay, so this is Xiaomi right over here. You can see the code is 1810, pretty much the underlying stock listed on Hong Kong Exchange, and the price about 42 Hong Kong dollars, correct? But if you just look one row down, this is it. This is pretty much where you get the SDR, right? The name is Xiaomi space HK space SDR 2:1. So I mentioned, right, there's a 2:1 ratio to SDR to 1 underlying. So in order to get the SDR prices divided by 2, and you pretty much get it. So you can see the SDR price is $3.56 Singapore dollars. It's slightly higher, 3.56 if you look at it right over here. The support is 306, right? So it's slightly higher, so it's about $3.56. So if you dip from 356 to maybe near 306 or maybe near 310 or 320, well, that could be a position to take, right, on the SDR right over here. And the code for the SDR is HKEX right over here. So that's how you can actually purchase this SDR, all right, that tracks Xiaomi stock, all right, that's listed on the Stock Exchange of Hong Kong, right, the Hong Kong Stock Exchange. Yep, guys, so there we have it. I've shared with you guys 2 Chinese blue chip stocks that we have seen weakness over the past 2 weeks as the market sold off, but there could be some attractive opportunities coming in real soon if we get some good bullish confirmation signals, right? So that's not come yet, but you want to put this stock in your watch list. I think these are 2 pretty good fundamentally strong stocks. Of course, they got hit as well, but you want to take note of when to get back in when the time actually comes, and how I've shared with you on the SDR how you can actually take a position on the SDR, Singapore Depository Receipts, very easily, right? And just like any other normal Singapore stock, you don't actually have to buy the one that's listed on the Hong Kong Exchange, right? So if you found this video useful, go ahead to give me a like, smash the subscribe button as well, all right? And if you want to find out a little bit more, guys, on the one good trend strategy, all right, my entire framework that I've been using for more than a decade now, and perhaps how you can also have an indicator like this to guide you on when to get in, maybe when to get out as well, based on the 1GD Pro indicator. Just click on the link below the video, attend a free webinar that I'm still running maybe a few weeks from now. Attend a free webinar, that's where I share with you guys a bit more on the entire strategy, and perhaps how you could also use a tool like this to just make trading so much more systematic, so much more simpler, all right? And I'm sure it will help you as well. All right, so Joey here. Thank you so much for watching. I look forward to see you in the next video. Take care.